What's up, folks? We're back with another quick midweek update. This is becoming a habit, guys. I hope you're enjoying it as much as I am. And boy, did we have an interesting start to the week where we took quite a bit of a nosedive. Let's take a look at where we are. Now, before I begin, I want to just dial back the time to February of this year, kind of when I started doing all this blogging stuff and videos. And back then, I had brought to attention a Wyckoff distribution pattern that was happening with the S&P 500. Now, at that point in time, which was we were right here, we had made a UTAD, right, a slightly higher high over here. And then I said, look, we're going to go into the LPSY, last point of supply, and then we're just going to come crashing down. We actually came crashing down to, I believe it was like 4,800 or somewhere around there. And that was just because I saw what was going on with the pattern that is known as a Wyckoff distribution pattern, which is essentially the way big players unload to the retail traders. And what they do is they keep it in a price range so that they get a nice high price, which is around this area, to slowly unload and dump to the retail traders without doing it too much, because that would push the price down and they wouldn't get a good price for their volume. So they do it like in little spurts. They let the retail buyers buy the dip and they keep unloading, right? And so that's essentially what a distribution pattern is like. And in this case, a Wyckoff distribution pattern. And so this is a pattern that's quite powerful if you know how to observe it. The other one that I brought up that I saw that was going on was with Bitcoin. And this was from months ago, actually now, where I brought up the fact that I thought Bitcoin was also undergoing a Wyckoff distribution pattern where it had gone up, made a marginal new high with the UTAD over here, and then started going sideways but slightly downwards into the last point of supply. And eventually it'll break through the support levels when all the supply has run out, meaning all the stuff the big guys want to unload. They've already unloaded it, then they let the price drop because they don't care anymore since they've already unloaded, and we break the support levels and go down. And that's pretty much what happened with Bitcoin. So I bring this to your attention because it's an interesting pattern to learn about and to also resolve out in the open when you start seeing it. And it can happen in different time frames, right? From the daily time frame, which is the time frame that I usually look at it the most, because it's usually at the daily time frame where I found it to be the most accurate, not the 1 minute time frame. Please don't look at stocks at 1 minute time frame. But basically, I wanted to just bring that to your attention. Those are some of the calls I've made in the past that have made me a lot of profits actually earlier this year. Now, what is going on today? Well, I had brought this up back in October, okay, so towards the end of last month, that I thought, hey, we're going into another Wyckoff distribution pattern, I think, in the S&P 500. Because back at the end of October, we had made that big run up. We had that huge one-day drawdown, which we recovered from, and we are going back up. And I said, look, I think we are going to go and make another marginal high, a UTAD, just like here, a UTAD, after which we make that marginal new high to suck everybody back in, thinking, woohoo, it's a new bull market run, new highs. We would come down into the last point of supply where the big boys basically unload the rest of the remaining supply of stocks into the retail and do so. And as they run down their supply, they don't care about the price so much because they've already gotten rid of most of it, that they let the price go down. And when they're totally out of their supply, we come crashing down. Well, look at where we are now. November 18, we had that big drop. We did make that marginal new high like I thought we were going to make back then. And after we made that marginal new high, we were chopping around, right? And now we're down here. So to me, I remember back here, right? When we made this new high, everybody's like, we're going up, and I said, no, I don't think so. I think this is a trap. I think this is a UTAD, upwards thrust after distribution, upwards thrust, UTAD. So that's what I thought it was. And I traded it that way, and lo and behold, it seems to be what is going on. So if this continues, right, this distribution box, which would be the Wyckoff distribution window, continues, and we actually go down, right? So we made the low over here, and we almost made the low over here, right? I would expect us to hit that low and do a little bit of a chop before finally breaking through, right? When they run out of supply, or when they finish dumping their supply onto the retail herd and dip buyers. So this is what my current base case is to do some of this, but eventually to go down, which means I don't know if we're going to have a Christmas Santa Claus rally this time, but we shall see. And one thing I want to just quickly mention is when I have a base case, it's an estimation, right? And an estimation by definition means it's wrong, meaning it's going to change based on new information you obtain. And so base cases, you have to have a base case. You have to have an idea of where you think it's going to go, but that's not necessarily what's going to happen. A lot of times my base cases can be correct, as if you've been following me, has turned out to be the case. Call it lucky or whatever, it just is. However, that doesn't mean that my base case, even myself believe that that's going to be what's going to happen. In fact, in my head, I know my base case has a high chance it's going to be wrong because it's an estimate, and estimates by definition are wrong. And so what I'd like to do is just update the base case based on new information that we gather, and then go from there. And so it's a continually updated base case, if you will, to reality, and we project to reality maybe not too far in the future because nobody knows, right? That's crystal ball stuff. But if you go like a week or 2 weeks, and you have headlights that can look that far. You can't have a headlight in the car that looks ahead for 10 miles, but your headlights could look for maybe like 200-300 feet in front of you with pretty decent accuracy. That is what I do, right? My base case is that length in time in the future, which allows me to see things and I can adjust accordingly. And that's the way I operate. It's been a low risk, high return way of operating, and something I want to share with you if you happen to be watching this channel. Moving along here, I think we got to talk about Nvidia now. So, because their earnings are later today, right? After today's session closes, they will announce their earnings. So the first thing I want to mention is that the circle jerk continues, right? Now they announced this new, I think it was like $400 billion partnerships between Microsoft, Nvidia, and Anthropic, and we're just going to keep buying each other's stuff and go, go, go. And this is just going to continue, right? I mean, this is not something that surprises me anymore, and I think this is just going to ratchet up for a couple of reasons, one of which I'll share with you over here. After that news, or before that news came out, we also heard from Sundar, the Google CEO, who basically tells BBC that if the AI bubble bursts, nobody is safe. So that's basically saying, we're going to hold you hostage. In so many words, we're going to hold the entirety of the market hostage, because if we bust, everybody busts along with us. And that is essentially, without saying the words, you can see what they're doing. They're getting together, the chorus of the circle jerkers are getting together and saying, look, we're too big to fail, basically, and that the government, you guys better bail us out. In other words, you, the taxpayer, better bail us, these big companies, out, because now we're too big to fail. If we fail, everybody goes down with the ship along with us. So you, taxpayer, got to pay for me, which I don't think is right. It wasn't right when we bailed the bank outs back in 2007 and 8, but now it's not even the banks. These are just tech companies. We're basically going to have to bail out tech bros, and to me, that's even more sacrilegious than bailing the banks out, because at least the banks had a function with the flow of money, which is integral to the financial system itself. So at least you can make that excuse. But when you come to some corporation, AI or tech company, that's just crazy if you ask me. And I don't think that's really right. So they're coming out with these veiled threats, right? That if they go, everybody goes with them, which I really don't like. And so if you watch the movie Gladiator, which, you know, I pull out some memes from, that's basically like what was going on when, you know, they were going to get their asses whooped, and they basically said, look, let's stay as one. That's basically what the AI companies are doing right now. That is essentially what is going on. And if you look at why they're all of a sudden doing that, look at what's going on with their debt, because there's no way they can finance these trillions of dollars of data center hyperscaler build-outs without creating money through debt. That's the only way. And one of the biggest offenders among the circle jerkers is Oracle. And look at what happened to. So this is a credit default swaps, which is basically the price of insurance in case their debt basically blows up. And that insurance price has skyrocketed with all the circle jerking announcement going on. So this, if you ignore this, you are really, really flying blind, because this is telling you something really clear. The debt of Oracle, which is the representative of the circle jerkers, has skyrocketed because the debt market doesn't believe Oracle is going to be able to pay it back. That's why it's right. This is like the CDS stuff from 07, 08, except now it's not the banks. It's these huge tech companies, and they're even bigger than the banks, which is really scary. The fact, how did we get here? How did we let this happen? Well, human greed. Never underestimate, like Al Pacino said in Scarface, never underestimate the greed of the other guy.
Don't underestimate the other guy's greed.
Sage words. To add on to that, just because, I've been talking about energy, right? Like, there's no way for the data centers to operate without electricity. And many data centers, like the two largest ones, couldn't even turn on because there's no electricity to power the data centers. Well, if you look at Nvidia, its market cap, a single company, is worth more than the entirety of the energy sector in the S&P 500 index. So a basket of companies in the energy sector within the S&P 500 is worth less than one company that's building chips that's going to be in these data centers. And if you look at the free cash flow for this, it's even less, right? So no matter which way you look at it, and you see what, Tavi Costa and Crestcard have put together here, this is astonishing. It's literally backwards. We are in a backwards, if you want to call it backwardation situation, and that's going to eventually resolve back to the norm, right? Which is not backwardation. This is kind of a backwardation in logic, if you want to put it that way, in fundamentals. Forget about price action. So everybody's wondering what is going to happen to the Nvidia stock price today after market close when they release their earnings report. Now, normally Nvidia has gone up into earnings, and they sometimes, like the last time, they actually sold off, but most times on earnings they keep going up. But this time around, we are going down into earnings. So this is not a normal situation recently for Nvidia. So what does that mean? Well, if you look at this price action over here, this line, right, around 180 is really important. It was resistance over here. We broke out of it, but then we back tested, we broke out, and we're testing it again. Double test over here after the most recent high of this very important level. You can just see it. You don't need to be a rocket scientist to see this situation. Now, what we're going to do today is probably go nowhere until the news comes out of their earnings, and everybody's wondering, are we going to go up or are we going to go down? Well, nobody has a crystal ball. I certainly don't. I don't know for a fact whether we're going to go up or we're going to go down. But again, my base case, which is an estimation, which by definition is wrong and will be updated, but you need to still have a base case and be, okay to share it with people and not be scared. You need to have some conviction and not be scared to be wrong. Otherwise, you're a politician. You say both ways all the time, and who's going to listen to you? So I say what my base case is. I'm not afraid of being wrong, and I'll update it as quickly as possible if I am wrong, because that's what it is. It's an estimate that is bound to be wrong that you update. So my base case is that's going to be something where the stock goes down, I think. Okay, and I think the stock, and who knows, right after release, it does quite a lot of this right after. So it goes up and goes down, goes up. But after all that initial herky-jerkiness, I do think it's going to go down to this level, right? The next support level, around 160. Before it makes a rebound, perhaps back up here, and then we'll see what happens. Does it continue going up, or does it go down, making some kind of a like head and shoulders over here? I don't know. But let's not look too far into the future. Your car's headlights don't go 2 miles into the front. Let's look, because that's not accurate. But I do think the base case I have is we're going to go down after the initial herky-jerkiness to around 160, and we'll see from there. It is possible to just skyrocket up as well, but that's not my base case. If we do that, I'm prepared to take action and again, just be like a monkey pressing buttons if that happens. So let's see what happens. That's my base case. We're going to go down because we have been down, and it's not just Nvidia going down, it's the entirety of the AI sector, the entirety of it going down, dragging the NASDAQ down because of some now mathematical reasons where people don't see how some of the stuff is actually calculating anymore. And speaking of the entire AI sector, this is just chart criminology, okay? And this is from the FT. FT made this chart using sources from Bloomberg and the Fred. And this, you have to be careful because you'll see stuff like, and you see Financial Times, so, brand name must be. This is criminology, chart criminology, straight up. They're saying, hey, look, let's compare the current bubble with past bubbles, okay? And these are very well-known bubbles. They're saying, look, based on 2022, the AI bubble, NASDAQ 100's got ways to go. Look, we're not even halfway there, this is the narrative they're trying to paint. But this whole thing is predicated on the start date. Why 2022? Now, their logic is probably because that's when ChatGPT came out, which, okay, that is actually a pretty sensical and commonsensical reason to use a start date. But my point here is this whole thing collapses the moment you change the 2022 start date. And that's why this is very misleading. This is again, criminology. Whenever you see stuff like this where they're comparing, you go look at the start date. That's how they trick you, okay? Because if you look at the start date from 2020, we're way above, right, the .com already. So why 2020? Well, 2020 also makes sense. Why? Because that's when the money printing started. That's when they hit the nuclear bomb button, the red button, because they freaked out with COVID and started printing and stimmy checks like crazy. So obviously that's actually a good case as well for when this bubble started, was when the money printing started. And the money just found different ways to go, eventually went to AI. You see what I mean? Be careful out there. Learn, whenever you see these comparisons, what is the start date and why did they pick it, and what are other start dates that also make sense or might be even better start dates, and is there a narrative that people are trying to sell to you? Be wary of that. Now they got that out of the bubble, let's take a look at bubbles in entirety. All bubbles pop, right? So 135% railway mania. These are bubbles due to some huge revolution or innovation that's industry and game changing, right? Railways, 135 pop and bump. Telecom.com, 403% pop and bump. Shale, 206 for energy. So AI euphoria, we're at 693, okay? Are we going to top and pop? This is a better way to look at it, okay? Are we going to top and pop? Most likely we're going to pop, right? We are not going to go up forever. I think everybody will guarantee that we are not going to go up with this traction forever and ever until the universe stops expanding. No. So what are you going to have? Is it going to plateau here? Unlikely. Most likely mean reversion, especially when you have a trajectory like this. What does that actually mean though, right? Well, it's just human psychology. I don't know if you know what the Dunning-Kruger effect is. But basically, when you start learning something new, you start learning new stuff, you not soon after you reach this, like, I've learned it all. I'm like, smart. And we call that the peak of Mount Stupid. When you think you're overconfident, you learn something new, you learned enough of it, and you think you figured it out, and then you realize that you're an idiot. There's a lot more you don't know. You get burned one way or another, or get taken to school by something or somebody who knows a lot more. So you enter this valley of despair, after which, because now you have learned to be more humble, you slowly over time in a sustainable fashion, they call this slope of enlightenment, gain wisdom, and now you're at a plateau of sustainability where you're basically a wise man who actually knows a lot of things, and the wise person knows that there's a lot they don't know. This function, okay, is a very important function. It's essentially, in my opinion, the function of humans in general. We all do this. And if you look at what happened, you might know of the Gartner hype cycle. These guys basically stole Dunning-Kruger's function, right? Packaged it up as something they can charge their clients obscene amounts, and arbitrarily put in dots of where they think we are in the hype cycle. and make money that way. And, I've always asked, show me, Gartner, how do you actually numerically calculate where these dots are in relation to each other, where they are in that cycle? How come this dot is this far from this dot versus this dot being this far from that dot? They will never tell you. And the reason is simple. It's subjective. There's no mathematical, systematic way that represents all these dots in here. So you're basically paying somebody to do this. God, these guys. Anyway, this is a function. So AI is following this function as well, right? They're following this function. And we will have this peak of peaks. That doesn't mean AI is going to change the world, right? Eventually, it's going to hit the plateau of wisdom and change the world like the internet did. But we're going to have to go through this. We're going to have to go through Mount Stupidity. And that is what we're preparing for. Okay. The other thing I want to leave you with is what's going on in Japan. Because, and just Dario over in X did a great thing. So the Prime Minister of Japan, seeing that the economy is tanking, says, I need to print 17 trillion yen. To which the Bank of Japan says, yes, but if we do that, our yields will skyrocket because we'll go into debt. To which the Prime Minister says, well, do yield curve control and make the interest rate go down. To which the Bank of Japan says, sure, if we do that, but the Japanese yen is just going to collapse. To which the Prime Minister says, that's fine, we'll just sell our dollar reserves to counter that. To which the Bank of Japan says, then we'll have the yen carry trade unwind, which will crash global markets. To which is sad. I mean, this is pretty awesome because this is essentially the deadlock that the Japanese bank, the Central Bank of Japan, is in. What are they going to do? What are they going to do? What are they going to do? There's not much they can do, right? And this just came out. The Japanese economy is just tanking, negative 1.8% from September. That just came out. Now with the whole thing with China and 500,000 Chinese tourists not going to Japan, that's going to even slow the economy down because the Chinese tourists spend a lot of money. That's going to just add more pressure, and we're going to have... So my point here is watch out for Japan because look at what's going on with their 20-year. The yields going up, just like how we were making fun of earlier, right? We're here. We're going to lose control. Watch them do yield curve control. The yen's going to... And then we do this. Watch it. Look, they're losing control. Look, here's the 30-year Japan Treasury. Highest ever in history. Okay, new world record. Never went 3.3 in the existence of Japan as a country. Did the 30-year, okay, go above this number? This is a new world record for them. This is not good. This is just one of many of these. Remember, like I said, I'll talk about this more in the weekend episode, but this is just one more of the big things lurking in the iceberg underneath the water that people don't see and trade on. But it's there, right? It's lurking. This is one big one of them. Now, finally, I want to talk about on Thursday, they're going to come out with the unemployment and jobs report, which they haven't been showing because basically the government shut down. And so September's data, which is going to be delayed, they're actually going to say they're going to release it, which they said they weren't going to do. Now they reversed course and said they're going to release it. Goldman came out and said they use alternative data here, that unemployment's going to stay at 4.3%. And that about 80,000 jobs around is going to be added based on a mediation or a median of calculation of alternative data, which means that Goldman thinks it's going to be a non-issue. And so I also think, I don't know, September's probably also going to, they delayed it, but it's probably going to be a non-issue. The October data after the government shutdown is, because that's probably going to be a negative number, the second negative print this year. You know, if you have a negative number print, that means recession coming. Now, they're going to blame it as a one-off to the government shutdown, but it's going to come around, I think, at around negative 80,000. Let's see what happens if it comes in at negative 80,000. That is going to be very bad news for the market as well. So that's going to be another nail in the coffin later on. But first, let's not get too far ahead of ourselves. Again, headlights in the car. Let's look where we can see. Base case, I think Nvidia is going to have a tank after the earnings report. However, here's the thing. Markets rarely bottom on Fridays. I don't think so. So what could happen is you could have it tank after hours and tank into the opening of Thursday's session. And then in Thursday, either at the opening or intraday, we have some kind of a flush out where high volume, big scary drop, everybody gets flushed out, and that provides an opportunity for a turnaround on Thursday leading into Friday where we continue to go up. Because Friday's turnarounds happen because nobody wants to hold over the weekend. So Friday's turnaround really rare. It doesn't happen. It can happen, but it's really rare. So if there's going to be a turnaround this week, it would be on Thursday, and that would happen on a flush out from the bad price action after Nvidia's earning, either intraday Thursday or flush out going into the open on Thursday, into which Friday will carry through for a relief rally. That could happen. That's my base case. We'll see how it goes. I'll adjust accordingly if it doesn't, and I'll see you on the Discord server. Peace out.